Wednesday, December 14th, market analysis, Stan Ehrlich. Morning, feeling a bit better. I had a cold there for a couple of days. I always start out with the S&P 500. It's my go-to index. I always talk about the DIA and the QQQ as well. But, you know, the major trends are the same. There's little nuances, differences in each. But I detail the spider first and talk about the DIA and the QQQ second. And occasionally I include the Russell 2000. And oftentimes they'll go to futures and sector symbols as well as forex. We're talking about support and resistance, technical analysis, oscillators, and the ER signal trading system that I've been developing for well over a decade, which did pick the October 13th bottom. That's why the vertical bar is green. And we also picked an excellent sell signal on April 5th because the bar is red. This is custom code. We also got a sell signal back on November 22nd before the highest high, before the actual top of the market started to develop. But we did pick the high day in the DIA and the QQQ, and that was the beginning of January. Now, today, we've got the FOMC meeting coming out, and it's coming out in approximately 25 minutes or so. It is 10:25 California time, and we have a sideways trading range basically developing this morning. I'll oftentimes go to the 1-minute chart to show you what's happening in great detail. So this is the beginning of this morning. And I'll also pick on my little pen here. This is the, whoops, didn't get the pen. And there we are, I think. Yep. This is the break point for the beginning of today. And obviously, this is current quotes real time at 404.03, 404.04 for the spider. And so most of this morning, it's been going sideways. A little bit higher, approximately 2 points higher than the previous day. Yesterday, of course, we had a huge drop from a very sharp opening rally. And I am trying to get my pointers back. Very good. Opening much higher at a resistance area, and I'll show you in a moment in the daily charts, all the way back down to close the gap, leaving a very, very tiny amount left. And then sliding back up again a little bit to close, about 2 points, 3 points higher. And this morning, another couple of points higher. I'm telling you that after opening 10 points higher plus and closing only 2 or 3 higher is not a good sign. Plus the fact, and here comes the daily chart again, we bumped right up against significant resistance. I put a dashed yellow line at 410. Now, the first high, which was on December 1st, was exactly at 410.00. This high was at 1044, I think, 49 yesterday, essentially the same price. Came down to the previous day's close and high. That would have been Monday. And closed on a little bit of a bounce. Now that we're going up a little bit more this morning, opened around unchanged, and has come up very slowly. And obviously waiting for the FOMC Fed announcement as far as what rates are going to be applied. Increase of rates is expected. I think it's 0.5 point. But that doesn't really matter a lot. Usually the amount that the Fed says they are likely to raise is what they end up doing. So the market has a expectation that's built into it in advance. What next comes out is exactly as expected, possibly. Well, their commentary might have an effect on prices. But look, technically speaking, and I'm a technician, not a fundamentalist. Fundamentalist. From my point of view, we got a double top here at 410, 410.5 over a couple of weeks time frame. and you've got a sideways trading range develop. You've got 392 as a support level that actually started to develop around November 11th, over a month ago. And two highs very close to the exact number of 410, a small fraction. The lows around 392 have been several times, give or take a point or so, in the last month. So if we start closing below 392, especially below 390, which is likely to happen on the same day, we're going to start the next leg down, which could be very significant. We're talking about a test of the October 13th lows and maybe lower. I would think to be the probable last major bear move in this 1 year bear market. It's almost been 1 year, less about 3 weeks. So what happens if it closes above 410? We'll have another leg up. I'm not sure that's going to produce a huge move to the upside, but it's certainly not what I expect, and I am looking for lower levels. So the Fed announcement coming out fairly soon, about a half an hour, may and may not cause a breakout in one direction or another. We'll see very soon. My vote is down. Next chart, DIA. We have the DIA making new highs since April, yesterday on the opening, but again, like the S&P, it did not hold. The opening was the high and new high ground. It punched through some buy stops, and it just failed. It came all the way down to a little bit lower on the day, and then closed slightly higher like the spider. And like the other indexes, and you'll see the Qs in a moment, we're up a little bit on the day, nothing special. It's an inside trading range day, meaning today's low is not lower than yesterday's low, and today's high is not higher than yesterday's high. So it's trading inside of yesterday's high-low range, usually meaning a lot of nothing, oftentimes called a doji if you are inclined to talk about candlestick charting. Remember, I started in this business in 1971 when candlesticks were not popular. They didn't become popular until the late 80s. Excuse me. Well, I've got a lingering cough from my cold. So, same situation here. And for the QQQ, we left a little bit of a gap behind from yesterday's large trading range. Gaps are almost always closed. I've said that many, many times in the months that I've been making these recordings. Go back and listen to some of the earlier ones. For example, before October 13th, I talked about it coming, and it came in a way profound, big time manner. We normally get, with tracking stocks specifically, several, maybe 5 or 10 signals a day, bullish or bearish, using this ER signal system, which does pick built to pick market tops and bottoms, and it frequently does. We also make mistakes, but we have a trailing stop that's a tight stop, and we don't lose much money when the market moves in the wrong direction. So the QQQ, daily data, and these are, of course, vertical bar charts as opposed to candlestick. It's the same information. They all have opening and closing and high and lows that just depicted a little bit differently. So I'm a vertical bar chart guy instead of a candlestick guy, but I taught candlesticks for a long time, Online Trading Academy, and I'm very familiar with them. So October 13th is the bottom day in a lot of stocks and indexes and markets in general. Today, an inside trading range, up only 1.8 at the moment. Not very large, not very volatile, pretty calm, obviously waiting for the Fed. Again, making new lows for approximately a month or a hair more is very bearish because the major trend is down. And with the Qs, they only bumped against the major bear trend line. The DIA did get above it and is still above it and needs to drop off quite a bit to get back below that line again, which is now pretty much irrelevant. But the spider never has closed above the line. It only got above it yesterday and then went right back down below it again. So the major bear trend line from the early part of January is still relevant for the spider. But this is the Q chart, QQQ, and it's bumping against that trend line yesterday. So I'm looking for a down move. I'm looking for a big down move. I'm sorry to say, if you are a long-term investor, although the good side is, I'm thinking February is going to be the time frame when we're going to bottom out for a very long-term, multi-year maybe, bull market. Remains to be seen. I'm not the best long-term market forecaster. My expertise is in relatively short-term. Now let's look at some futures contracts. And we're going to go to, my futures. And these are continuation or perpetual contracts. They're not exactly the same contract month like December this or January, February, March that are tradable. This is the wheat market. It does represent the way the market's moving and the individual contracts extremely well. We did get a profound sell signal at the top of the bull market created by the war beginning, and that was based on March 8th's price range, and it has never been higher since. We also got an excellent sell signal on May 24th. Now, nothing happening at the moment in wheat, and I'm going to go through these commodity charts fairly quickly, basically commenting about the current market situation and any new signals happening today or in the last several days, a week or so. Next chart, soybean oil. I told you Monday was a bullish engulfing. We have an outside up day and oversold conditions, and that turns the price green. This is available for TradeStation at this time. We're developing it for NinjaTrader also, but we're not finished with that. But TradeStation's been around now for a long time and working very, very nicely. So green daily bar chart means a buy signal. And we got one on Monday, and it's been going up yesterday quite a bit and unchanged at the moment. Next chart, live crude oil. I mentioned it being oversold. That implies that it's going to bottom out soon. It did. It took a few days. And now we're well above the oversold conditions. I'm expecting it not to go too much further. There's a lot of technical resistance, just a little bit higher now, around 80, 81, 82. And then I think it's going to turn back down next. And the long-term trend is down. And we did get 3 great sell signals at the high of the market. The exact high day is an ER signal bearish. Next chart, gold. I had a sell signal approximately a week and a half ago, didn't work. We have a small loss on this trade, but sometimes these signals are clustering. They give 2 or 3 or 4 in about a month or less. And that's exactly what happened. For example, back in September 28th is the bottom. We have a bullish engulfing and an oversold condition. And what you were looking at the bottom of the charts is the RSI. I learned RSI from Wells Wilder himself. I was on the lecture circuit for decades in the 70s, 80s, and 90s, and somewhat in the 2000, 2010 timeframe, not doing a lot of it lately. So, also a great buy signal on July 21st. But we picked the bottom of this market in the gold market on September 28th. We did make a minor new low, but not on a closing basis, November 3rd. Turns out to be a double or triple bottom. Looks like a triple. They're fairly rare. Just made a higher high for the trend since our buy signal yesterday. I'm looking for not too much higher in the next day or two. In fact, I'm going to revise that comment. I think we're seeing a high yesterday because of historical resistance being very profound at yesterday's highs. In order to prove that that is going to come true, we probably need to close below yesterday's low and the day before that, and in particular, closing below 1,774. That would do the trick. The lows for the last 2 weeks. That's gold. Next, soybeans. Trend for quite a long time is, in fact, going no place fast. So it's neutral. I don't think we're going to see any big move unless we have a bullish breakout or a bearish breakout. So I've got not much to say, frankly, for soybeans at the moment. Next. And I can't do that with my pointer on or pen. So going back, here we go. Next chart, come on. Oh, the E-mini. It is an index, but it's also a futures contract. So October 13th, the October lows, which I talked about a month or two in advance, happened in a profound, big way. And we had yesterday the highest high since, but I think it's getting a little overdone. My comments about this spider DIA and QQQ obviously apply to the E-mini, S&P 500 E-mini futures contract, and I'm looking for it to turn back down. Next chart, silver. We had a bad sell signal a couple of weeks ago. Didn't turn out to produce a move which we all hoped it would. I don't have any really great things to say about silver at the moment. The trend is obviously up. There's resistance above the market. It already bumped into it at the highs of the day yesterday. You're overbought. So I think we're going to have a little slippage here for the next several days. Next chart, live hogs. We had a great buy signal. It only lasted 2 or 3 days, but still definitely an excellent move. And now we're back down to those same price ranges and in a wide support area for a long period of time. I'm looking for some stability. Frankly, I'd be looking for a buy signal fairly soon, but we might see a little bit of new lows before that buy signal develops. That was hogs. Next is live cattle. Resistance at previous rally highs has stopped the rally yesterday. We turned down significantly today. Nothing particular to say except for the sideways trading range that we've been developing since the last significant overbought condition, which was the end of October. And we had an excellent buy signal here, an excellent sell signal over here. Next, this is heating oil. Got oversold. We're rallying back up into resistance. I'm looking for my next signal. Not much to say here, neutral. Next, soybean meal got very overbought. I talked about that, but the major trend is bullish. We have an extremely good major long-term bullish breakout. And just before that, we had an excellent buy signal at the bottom of the break, October 7th. It's green. And a small sell signal. It worked okay, nothing great, for a few days on November 7th. But being overbought as much as it did get overbought, and look at the RSI custom RSI chart at the bottom. This is also available. It runs on TradeStation, as well as all of what you're seeing here. Next chart, soybean meal, OJ. Sorry, this is OJ. Got overbought, pulled back into support, starting to work its way back up a little bit this morning. The trend is up, neutral to bullish at the moment. Next chart, coffee, a little bit of a double bottom. We have a bullish signal on the first low of the double bottom and a very big bullish engulfing 2 days ago on Monday to create the double bottom. Unfortunately, we didn't quite get oversold, so it didn't turn green. Otherwise, I'd have 2 greens at the 2 lows, which would have been great. And it does happen sometimes. Next chart is natural gas. Oversold. It turned back up again. That was a week and a half ago. Turned back up, which I talked about. Gapped up. Talked about the gap being closed. Not yesterday. It gapped up over the weekend. But today, the market's come down and closed the gap. The trouble is the trend is down now, and I'm looking for resistance, which it did get up into to stop the rally. No signal per se, but I'm looking for neutral to lower levels in the next few days to a week or two, and I'm expecting it to see new lows. Next is high-grade copper. Fairly neutral here. We got an excellent buy signal September 28th and a whopping great sell signal way back March 7th. So I am slightly bearish, but the trend is up slowly since summer, July. Nothing particularly spectacular or interesting here at the moment. Next chart is platinum forming a pennant formation. Pennants are usually continuation formations. So what was the trend before the pennant formed? It was up. And we did get a buy signal almost at the lowest low, not quite. And a few very decent sell signals in the meantime, short term. And way back on March 9th, the top of the market, a fantastically important red ER signal, sell signal. At the moment, I'm neutral. We need to break out of this pennant formation, which will probably be up. Next chart, cocoa. Got a sell signal that worked for a couple of weeks on November 11th. At the moment, resistance has stopped the rally Friday last week, and we're going sideways. So I'm waiting for a breakout or some other signal in the interim. Next, sugar. Big update today. Challenging the highs for the trend, which is up. No surprises rallying. The size of today's rally is pretty significant. And it's a little bit of a breakout for the last 2 or 3 weeks worth of sideways trading range, now attacking the highest high for the move. Not overbought yet, but pretty darn close, very close. So I'm looking for new highs or a possible double top. That's interesting. We got a fantastic sell signal way back here on March 13th. And we have an excellent sell signal not too long ago, October 17th. Lasted for a couple of weeks. Next chart. Bond futures, the 30-year long bond. Last Friday, we had a sell signal. To be very strict about things, which I am, and if you're a technician, you should be. We made higher highs. That kills the signal. But I mentioned before, they tend to cluster sometimes. You get 2 or 3 or 4 within, give or take, about a month. We only have one at the moment, and today's an inside day, obviously waiting for FOMC meeting announcements. I think the 10-year notes are next. Same comments. Up against resistance. Bottom formations came true. They worked like they should have. They're all over now. They're done. They worked. We're back up to resistance. And it looks to me like we are likely to see this start to go down some. Now, this chart and also the 30-year long bond chart, the US, the symbols US, I think are in the early part of a long-term bottom developing. Although I may see new lows, I don't think it may be by large amounts. And I think it could contribute in the end, when we look back in time, maybe sometime next summer or even later, that it was potentially part of a bottom formation. And we've seen the beginning of it back in September, October, and November. I don't think that's it. I think those lows will be challenged, if not broken, but I think it's definitely, well, I think it's going to be part of a long-term bottom formation. Next, and we're back to wheat. Let's check out some sector symbols. Now, remember, there's a variety of individual stocks that create the sector, like gold mining companies create the gold mining sector, or drug companies create the drug index, drug sector, and so on. So I'm not sure which is which here, but the symbol tells the story. XLP is in an uptrend, but up against resistance. No signal at the moment. The next symbol is IYE. And we're having a buy signal brand new today at the moment. Now, it's important that the market stay higher than yesterday's close or the signal is canceled. So the buy signal is not cast in stone yet. And of course, it may not work. Sometimes they don't. Usually they do. That's why I'm showing you these things. We got an excellent sell signal. Not on this chart. Okay, this sell signal was violated the next day, although it did produce a bear move. That's not what I want to see. I want to see the red on the high day and the green ones on the low day. Next symbol is SMH. Green on the bottom, October 13th, which has gone down now in history, being 2 months later, as an extremely profound bullish engulfing, and it's an ER signal, green in oversold condition. It worked great. Plus, it was also the October lows, which is a seasonal, and let's see if it happens again next year. We're developing our website right now, and we'll have a whole mess, decades worth of October lows on the website, ersignals.com, soon. May take another month or a few weeks to finish it, but it's coming. And we'll have a lot more information, cyclicality, cycles. This strategy is available, and others. Next symbol is XLK. Nothing today, but we caught the bottom of the market October 13th. Sideways trading range since the low on October 13th. Excuse me, pardon me. But we need a breakout here. Higher high on a closing basis or lower lows. Trend is sideways for the moment since October 13th. Next. We could have almost caught the bottom on October 13th, but this particular symbol did not get oversold. That's XLF. Next. Nothing going on here. Trend is up, made new highs for many months and stayed there, pulled back into support modestly for a few days here and there, and made new highs yesterday, although the close was not very convincing. We need to see another new high and a new high close. Next, XOP got oversold on Friday, bounced on Monday, Tuesday, and today so far. We have a red bearish engulfing ER sell signal on top on November 14th. That's what you want to use the system for, is these sell signals and buy signals and the money management techniques. Next is GDX. Nothing lately. Pass on that. Next, we have OIH. Looks like it's starting to move down. Excuse me. We have a sell signal in the high day couple of months ago. Next, XLB. Nothing particularly profound here. Want to point out these are the signals I live for. And that one is on April 21st and a huge 2 down days afterwards. Took 2 days to wipe out 2 months of strength. After that, bearish engulfing, overbought, ER signal, sell signal. Next is XLV. Couple of bad sell signals recently. Getting up toward major historical resistance. Not quite overbought yet. Seems to have a chance to make a minor new high for the short term here. But I wouldn't go running after this market. I'm a little concerned that it's getting close to a potential major top. Next. And that would be XLE. Today, in progress, now, a new buy signal. That's XLE. Buy it somewhere close by, if you so desire. Use a money management sell stop slightly below today's low at this point, and cross your fingers. We'll see what happens. Next symbol, I'm going to skip these at the bottom at the moment. I want to look at forex real quick. The euro dollar is a new high ground for the rally, but it's overbought yesterday and today. Don't go chasing this market up. It looks like it's about to turn down. I would consider being a buyer at lower levels soon, but let's see what happens. My system did catch the bottom of the market September 28th, the low day, and has had some other good signals in the past as well. Excuse me. You can see we broke out of a downward slanting channel that was good for at least a year. The dollar index is going to be the exact reverse. We have the red bearish engulfing on top, September 28th, and new lows for the move in the last day or two, and a possible new low close today. We picked the top of the market in the dollar yen. Great trade there so far. Looks great. September 29th, I believe, October 21st. Next, Aussie to the US dollar, Australian dollar to the US dollar. We got the market October 13th, bottom, and had two more buy signals a few days later. And we have seen highest highs for the trend so far yesterday, and a possible new high close again today for the trend. Next, we picked the top of the market here back on October 13th, and we have an excellent buy signal November 21st. Next. We've got some great buy signals in the dollar Swiss franc. Excellent buy signal June 3rd, green. An okay buy signal on August 2nd, and a bad one a few days later. A great sell signal on September 7th, when only 4 or 5 days later, September 13th, we have a great buy signal after a large break. That's a great combination. So we're oversold now. Don't go selling it short in oversold conditions. Look to protect your profits if you are already short from higher levels, and look for buy signals for new longs potentially. And euro to the pound. Nothing sideways, small pennant forming. Great buy signal way back in March of this year, and the date was March 7th. Thank you very much. Profitable trading to you. Signing off, Stan Ehrlich.